before Zoom would send us out, today we would start with fundamental analysis. So I want to be able to oh, my network. So I want to be able to teach you guys fundamentals and to make this a playlist on YouTube actually, and so that you guys can understand, how to read the market. You use your technical analysis to take your entries for everything. Technical analysis will literally tell you where price is going. So you don't need fundamentals per se. You don't really need it. You just need to be aware of it. I feel like fundamental analysis is like our monthly and weekly levels where you just know that they are there and you know when price gets there and how it's about to react, but you don't need to use it every single day. So knowing that certain news is coming out for your pair, this is what it means, and it's going to cause you to add more positions. So I'll use I think the Euro JPY trade that I took on Friday as an example. Or as an example, like you'll be able to add more positions if you know that, okay, price is this volatile, so you can, like, okay, maybe let me stay in the trade longer, or let me just add one extra lot or anything. Like, you'll be able to take better decisions when you understand what the economy is doing. So I put together, like, when you want to trade Forex, fundamental analysis, what it is, and how you should approach it. So what is fundamental analysis? Basically, it is the study of the economic indicators, and it is an attempt to predict the future market conditions, an attempt understanding what the economy is. So basically, this slide that I have on and our classes, as we move on, we are going to go over different components of fundamental analysis that in regards to the Forex market. Okay, so you can also use it to understand the economy, because I remember in Forex 101 I talked about how the Forex market started and how the economy is driven by supply and demand and everything. So understanding the economy will really do great with understanding how the currency moves, right? The flow of money. So also referred to as the news events, you have a predictable effect on currencies. Central banks are responsible for implementing monetary policy that is designed to meet the fiscal policy of government. So, the governments are the ones that you put the fiscal policy there, and central bank is there for monetary policy. So whatever government is in power, their agenda for the nation should go in line. The central bank should go in line with whatever that is. That's why what's happening in Nigeria right now was not part of the policy that this government wants to, what they had in mind. It just happened, right? That's Nigeria for you. It was not in their manifesto, it was not in their agenda. The central bank, just happened. And the president, proved. So it is the ability to influence, short-term risk. Just all of these definitions just to help you have a grasp of what fundamental is. So how to be a good fundamental analyst? First of all, it requires hard work and patience. You need to have a long-term outlook. So I know we have economic indicators and price reacting to it and all that, but it's all for the long term. For example, see, throughout last year, I mean, most part of last year, in the US, the Fed has been increasing interest rates. And the reason they've been doing that is just for this moment now, for what we had in December, January, and now February, December and January. That's the outcome of what they have been doing all through from March to like October. They were increasing interest rates drastically, and now we can see the effects a little bit. So you have to have a long-term outlook. What drives price in the long term is fundamentals. What drives price in the long term is fear and greed, because there's a saying that you buy when people are fearful and sell when people are greedy and all that. So you also have to have an investor mindset when it comes to reading fundamentals, because investors, normally people that buy and sell dollars, um not Forex, not our daily trading. I think I explained in the Forex that's that webinar that I did the other time, the difference between that Forex trading, a Forex day trader, and then a Forex business person that you buy and sell the currency. So those people are investors. If you bought the dollar when it was 400 and now it's at 700 to the naira, then your money has increased like almost 50%, like 40%. So you know that if you put in 1 million naira, your 1 million naira is increasing to like 1.4 1.4 million naira and so on. So that's like how people invest in currencies. So when we say investors are moving money here and there, that's like they are buying the currency. Okay, so you keep up with news. You don't take trades based off of current news. You use it to determine the long-term trend of the market. You don't enter trades based on fundamentals. You already have your technicals. I'm most of the time, like 90% of the time, technicals and fundamentals are aligned once you understand how to read the market. Not the guesswork that 90% of traders everywhere are doing, that oh, you sell, pull, sell, stop, and everybody is just always screaming when it's time for news. It's not this one. You understand what you're looking at, you know how to read the market. You can understand how to take a position. So you use the news to determine the sentiment, optimistic or fearful. So we are going to talk about economic cycle. So this is also part of it. You watch a lot of news, Bloomberg. So I personally don't watch news. I read it, because when you're seeing headline this, headline that, all of that. When I first started trading, when I first started learning, I was working for a training Forex company, and the man will always say, always watch Bloomberg, always watch all these movies and all that. And me too, I started watching CNN, by the way, don't watch CNN. The news is like it's like campaign after election. Um, always watch all. So I started watching all of those, but it was just giving me anxiety. Like I was just seeing, I don't watch news normally because I just don't watch it. So I read from all of these platforms. Also, I read them. Sometimes I just get a view on YouTube as to what different analysts are saying and all that. Also understand their long-term drivers, which is what we're going to look at subsequently in the few weeks that we would complete this. So do you guys understand so far what I've been saying?
Yes.
Okay. So observe economic data. So the data, when we have a lot of news releases, you understand that, let me gift. So you understand that we have economic calendars, you have your Forex factory, which is the famous one. I personally use my FX book to check for news calendar. My FX book and marketwatch.com. That's MarketWatch is just for USD news alone. Sorry. my FX book is for everything, and it's just more comprehensive for me. And yeah, so Forex Factory is also there, is great. A lot of people use it. um so what comes out in the news is the data. We are looking at the numbers, we are looking at the percentages, we are looking at the previous data, we are looking at the forecast, the expectations of the analyst, okay, and how the market reacts to what they see. The data might come up as positive, but the currency will go down. But if the percentage is positive that and less than expectations, the currency will go down. So this statement is for different types of economic data. So when we go to economic indicators, you understand, according to the currency, which one are they, like, does it react to more, how it reacts to it. Like JPY, for example, is very keen on trade balance, and even the US also, trade balance and all that. So you need to how they react to those percentage numbers. So we'll give examples when we get there, and all that. So yeah, these are the economic indicators, or some economic factors to consider in fundamental analysis. Macroeconomic factors. So you have your economic indicators. These are the things that encompasses fundamental analysis. So you have your economic indicators, you have your political events. For example, in Nigerian, how am I using Nigeria? But it's what's hot right now. Nigeria economy, we have our elections coming up. Normally is affecting, is, let's say we didn't have all this naira redesign and everything, it will affect the volatility of the currency and all that. But this entire thing with naira new notes, everything is like is supposed to cause a higher demand for the naira. And the law of supply and demand, the more the demand, the higher the price. So this is supposed to make naira more valuable if it does what it's supposed to do. So we also have interest rates, you have commodity prices, that's like your gold, commodities, your gold, your salt, your coffee, your beans, all of those things, platinum, they're also in the market. Everything is intertwined. The price of all of those things, people are trading, people are exchanging currency for that. Then in the US especially, you have your credit ratings, and then you have the currency regimes. Like, for example, if what's happening in Nigeria happened in the US, you know how dramatic it is going to be. You know how dramatic it's going to be. Like, they're changing they're redesigning the currency. First of all, they'll give you a whole year. They know, they understand. Then you also have carry trading, where you have different capital investment flow, where you have different companies. Let's say a large company like Apple. Now you want to, they are doing business with China, they're producing over there. Then you have your merger and acquisitions. So when different companies, large companies, like all these 4,500, that's why you have your US 30. You have to understand, the companies inside and what's happening with our earnings. If Facebook wants to buy another company, it's definitely going to affect the stock of, Facebook. And then if you hear that, like, for example, when Amazon bought Ring, it will increase their valuation, all of those things. Then repatriation of profits, that's, let's say they made money in dollars. This means, I defined it, bringing profit from other branches in another country. So they made money in yen rather, and they want to change it to USD, the exchange rates. So it depends on the amount, right? If it's able to move that currency and cause like a demand or supply shift in that, you also want to, understand all of those things. So if it's time for Tesla, for example, or for Amazon to, do all of those profits for profit earnings, let me say earnings, for example, it's going to cause a shift in your indices, your Nasdaq, your US 30. So understanding those about the companies is very good. So um everything has an underlying factor, which is supply and demand. When there is enough supply, when supply increases, it causes depreciation. When demand increases, it causes appreciation. So again, I'll use our current situation. We are looking for naira everywhere, and I'm hearing like some people are paying for naira. So, so if I had I read someone's status that said that in the club, they were changing 50K for 50K. That was wild to me. Like, you pay 50K to get 50K. Like, really. So now people are paying to get naira. So there's a lot of naira is appreciating in value. So when there is a lot of demand for it, then it will appreciate. So that's economics for you. The greater the supply, the better the cost demanding and stuff like that. So what are the big boys looking at? You also want to look at what they are looking at. Who are the big boys? We are looking at the government and the hedge funds and the central banks. So what do governments look at? The government look at the employment data, and then they look at inflation data. So that's why sometimes the central banks work in hand with the government, and some government what will I say now, to some government party, like in the US now, you have the Democrats are ruling them right now. So like they might want some policies, some monetary policies to favor what they are doing. So if at the end of Joe Biden's term we have like more people unemployed, then that's not bad for it. That's bad rather for his government. Do you understand? So, and then, what causes unemployment when you have when there is inflation in the economy and all of that. So the Fed may sometimes, not the Fed, central banks may sometimes be working with their government, and sometimes government may have more, it may cause some form of manipulation, but it won't come across. It won't be like they are manipulating. It won't be obvious, rather. It won't be obvious. So government looks at that. Then the hedge funds, you have hedge funds that are handling trillions of dollars. Okay. They move the market. They don't look at one data alone. They look at a like they look at different major data like unemployment, consumer spending, what's happening in the economy, what are the masses buying, what are they spending money on, how many people are employed, how many people are in the labor market, how many people want to be in the labor market. That's what's happening in UK right now. Like they have low participation in their labor market, and then people are striking because they are working overtime because people are not wanting to come to work. So now the UK Bank of England, they are now increasing interest rates drastically, exactly what the US also did. And what caused all this confusion in the entire world was the pandemic, or is the pandemic, because we don't know if it's still pandemicing. So for today, we are going to look at the context, that's the factors that determines the strength of the economy. This business cycle stage is also called an economic cycle. We're going to go in depth into economic cycle maybe in our next class, or if we have time today, we can look at a film. So what business cycle stage are we in? Are we in expansion? We have four. Are we in expansion? Are we in recession? What business cycle stage is it in? And we just know that the US, I don't know if they admitted to being in recession, but technically they were in recession because they had two negative GDP ratings. So you understand that. But GDP data. So are you in recession? Are you in expansion and all of that? So historic performance, how did price behave, 10 years ago? When we get to 10 years, we would see like some form of performance with in the trading. When you look at 2020, you look at how we had like COVID and all that. Those are historic times. When you have the 2008, when you had it 2008 crash, that was like historic. So they compare data year on year, they compare it to 10 years, they compare it, they just said our price went to a 34-year low, a 34-year high, 50 for the first time the Fed increased interest rate. They were like, oh, they just increased it by 50 basis points, the highest it has been in so years, since 1980 something. So all of those historic performance matter in determining the strength of the market. Then you want to look at the numbers of revision, advanced, prelim, and final. So they look at things ahead. You have a lot of economists analyzing all of these things. So you want to look at what happened before, literally this forecast, this previous forecast, and then actual. So the actual data is what we are all looking at. So for it also depends on the economic indicator. So when we look at them in depth, we'll see the one that we want to focus on. Does that make sense? Like, so each economic indicator is like one topic in technical analysis. Is like GDP is support and resistance, balance of trade is like your supply and demand. So you want to look at them individually to understand how they move the market. So then the economic power of the country, of course, USD is king, right? And then how people are doing business, the supply and demand and everything. Then timeliness. Please hold on. Oh. Okay. Sorry, I had to. Let's give me out. Okay, so timeliness. The earlier the news is released, the more it will move the market. Yeah, the media coverage. So we already have the schedule of the news in the different economic calendars, so we definitely know when it is being released. Then when the media is talking about it a lot, it causes a lot of volatility. When they don't stop talking about it and they keep like talking about it, causes like different volatility in the market. So yeah, when we're looking at economic indicators, there are some that you have to understand the correlation. Okay, so I defined it in the next slide. You have the strength of that indicator, you have the predictability, and then you have the correlation. The strength, that's what we see on Forex Factory. You have your low impact, high impact, medium impact. The low impact news are the ones that are in that yellow folder in Forex Factory. The medium impact is in like a brown folder, and the high impact is the red folder. The low impact news do not move the market as aggressively as the high impact news. So most times people just focus on looking at the high impact news, but that doesn't mean that those low and medium impact is not important. They all move the market, but low impact and medium impact may be like your advanced reading. So it's all data that are comprised, like that are coming together. I like to look at medium impact also, like it's all different data that is like comprises at the end of the day to the decision that the Fed will make. Then the predictability of it, is it a leading indicator, is it a lagging indicator, is it a coincident indicator? Then is the correlation positive or negative? What I mean by leading, lagging means that what's going to happen, that's a leading indicator. Then a lagging indicator is what has happened in the past. So like we said, they use what happened in the past to determine the future interest rate. So all those low impact news or even some high impacts, like the okay, that's a leading indicator actually. Things like your unemployment data, your CPI, and all of those are leading indicator because that's what's going to happen, like, in the future. Then what's happening now? So we have 10 minutes left. Then is it positive to the business cycle? Is it negative to the business cycle? So it depends on the economic cycle that we had. That's what we mean by correlation. If we're in recession, how is that data coming out, like the CPI? How is it affecting how is it improving the economy to take us out of a recession? Then if we are in like a positive environment and everything is going nice and well, and we have like a shocking data, how does it affect, how does it change that cycle? Yeah, so how to apply some of your indicators. So I think this is where we will stop today before we move to economic cycle in the next class. So you have your absolute and your delta and your trend. Your absolute data is the numbers, the delta is the percentages, and then the trending indicators are like your the impact, the strength, the strength of it. So do you want to look at is it above or below expectations, where you have your actual forecast and previous. So the forecast is what the analysts are looking at, expectations, like based on past information, this is what we are expecting in order for everything to be all well and good. Though, let it be in this number, let it be in this percentage, then just like I said the other time, that the hedge funds and the central banks do not look at one indicator, they look at every aspect of the economy and then come to like a conclusion based on different like indicators. So you base your research and determine how it will affect the future monetary policies. So like the NFP that just came out on Friday is going to affect definitely the interest rates, and we'll get a grasp of that from what Jerome Powell says on Tuesday, because he's going to speak on Tuesday. Also, if you trade things like the euro and you're concentrating on that, the ECB also are speaking about their currency and all of that. So just what they say and how they say what they say. Like this last interest rate, the Fed chairman said that we are already getting into the deflationary like era where that means that inflation is going according to what he had at that time, but he doesn't want to push it, right? So that's why they did only 0.25. The moment they cut interest rates, it means that they are starting to pivot. That means they are switching from their hawkish stance into a dovish stance. Hawkish means when they are increasing interest rates, dovish means when they are cutting interest rates. So we'll go more on interest rates when we get there. I know we've done it before, but we'll do it again once we get to that part. So certain economic data can be distorted by seasonal factors like your Christmas. definitely your travels are high. You're buying retail sales normally high. People buy more than normal. And then all of those things, it increases retail sales. So you can't really use that and factor it into the monetary policy. That's a seasonal factor. Yeah. So do you guys understand all we've been saying so far?
Definitely, we
Okay.
do.
So we have next week or for another class, for some reason I just started having a strong headache. So we would go into the economic cycle next class, and we'll talk about the 4 types of economic cycle. Here you have your expansion, your peak, your contraction, and your throw. So this is like the like what they call it, the graph now. So you have your expansion, price moves into a peak, then another expansion again. So we'll talk about it in the next class. Does anyone have any question? Yeah, okay. So we still have like uh economic indicators here also. So probably I wanted to go through that diagram here again. All right. So I'll see you guys next week. Have a great trading week. And check for your high impact. If you are trading AUD, you have your interest rates coming out also this week. You can check your calendars to see the news. So good night, guys. Right.
Right.